Hello and welcome back to Investing for Generations, your channel for high quality stock research for long term value investor. And today I want to take a look at the newest holdings in the Berkshire portfolio and see what Buffett picks here. And this is, of course, very interesting to me because some of the companies of Berkshire are also in my portfolio, and also Berkshire by himself is also in my portfolio, is the third biggest holding in my portfolio, as you can see here, with 6.45%. And also some other companies which was in Berkshire portfolio or are still in Berkshire portfolio you can find here in my portfolio. And so of course always when Buffett reveals his picks in the 13F filing, then of course you should look at it and see what he picks and what he did in his portfolio, not to copy him, but to get an idea. And of course, if there is something matches your portfolio too, then of course also maybe to follow him. And so here you have a view on the performance of my stocks in my portfolio. And you see this looks very green. I started this portfolio at the 2nd of December 2019. And you see Walt Disney almost double, Caterpillar almost double, and so on. And if you are new to my channel, you find deeper analyses to all of these companies on my channel. I put a link to the playlist here up on the screen, and you get an update every week on this channel. And with this portfolio I made since the start at the 2nd of December 2019 a performance of over 50% now, which is a big outperformance to the S&P 500 by over 25% right now. And this is amazing and this is good. And all you can find here on the channel is just for long-term value investor. And so I just look for high profitable businesses, almost boring businesses, as you can see here. Nothing very spectacular, no big tech or something, and just try to build wealth over time. And if you like this idea, subscribe to my channel and follow me on my road to financial freedom. And as I said, you get an update on my real money portfolio every week on the channel, and next to that also analyses of different stocks. And of course everybody know about the big investments of Berkshire Hathaway in Apple, of course, Bank of America, Coca-Cola, American Express, and so on. And today I want to look into the three stocks Warren Buffett bought in Q4 into his portfolio. And in this article of Investopedia from February 17, Deborah D'Souza just wrote, shares in telecommunication conglomerate Verizon, insurance broker parent company Marsh & McLennan, and energy giant Chevron all rising today for the same reason. Billionaire investor Warren Buffett's Berkshire Hathaway sees them going higher. And so let's take a look into these three companies. And first of all, a look at Verizon, the big telecommunication company. Verizon right now have a market capitalization of $235 billion with a PE ratio of 13 and a forward dividend yield of 4.45%. Let's dive deeper into the financial numbers of Verizon. And to look into the financial numbers of companies, I usually use macro trends. And just take a look at the numbers I normally look into before I decide to buy a company or just to analyze a company. And first of all, take a look at the revenue. And when we look over time, over the last 15 years of the revenue, then we see, yeah, first a grow, of course, but lately, in the last 5 years, it's stagnant and even a little bit of a downturn. So that's not very impressive lately. And also when we look at the earnings per share over the last 5 years, we see up and down around $4 per share every year, but not a big increase lately. It's very flat over the last few years. Then of course I also take a look at the margins, and we see we have lately net margins between 10 and 20%. This is good. This is a profitable company. That's fine. No problem with that at all. And what's of course also very important to me is the free cash flow. And when we look here at the last 5 years, and we see at least over the last 3 years, the free cash flow just gets bigger and bigger. And this is of course a very, very positive sign. Verizon was able to generate a lot of free cash flow lately. And what's also very important to me is the debt equity ratio. This is a ratio between the long-term debt and the shareholder equity, as we can see here. And we see that the long-term debt over the last years increased, and also the shareholder equity increased. But at the end, we have right now a debt equity ratio of 1.78, and this is quite high for me. I don't like that. I like my companies with a debt equity ratio under 1, quite well under 1, and so 1.78 is a little bit too high for me. I don't want to say that Verizon have a debt problem, but this is far from numbers I like for the companies in my portfolio. And so overall, I would say the financial numbers of Verizon, the free cash flow is very positive, but the revenue is stagnant. The earnings per share also is stagnant. And the debt equity ratio is quite high. And so overall, I don't like these numbers too much. It's not that impressive. And so Verizon for me is not really a buy right now. And the big story behind Verizon is the 5G and the role Verizon can play in this 5G market. And it seems like they can have a very good position in this market. But that's not enough for me to invest right now. I'm not Warren Buffett. I'm very sure he knows more than me. But when I look at all these numbers, it's not a buy for me right now. And also, when I calculate the intrinsic value, I come to an intrinsic value around $60. So with a current stock price of $56, we are around the intrinsic value, a little bit under. And of course, in a market where most of the companies are overvalued, Verizon looks really cheap. And I think this is maybe one of the reasons Warren Buffett bought in. And I think also the other is the idea of this 5G story. But overall, it's not that interesting to me. And if you follow my channel for a while, I had AT&T, another big telecommunication company, one of the big rivals of Verizon in my portfolio, but I sold lately. And you also find a video about that and why I decided to sell AT&T. And so the whole sector, I don't really like it right now, and so I decided to sell AT&T, and Verizon is not really a possibility for me. The second stock Buffett bought into his portfolio is Marsh & McLennan. Marsh & McLennan have a market capitalization of $60 billion with a PE ratio of 30 and a forward dividend yield of 1.59%. And Marsh & McLennan, before Buffett bought into this company, I really never heard about it. Maybe some of you just the same, and so just look at the description. Marsh & McLennan is a professional service company, provides advice and solutions to clients in the areas of risk, strategy, and people worldwide. It operates in two segments, risk and insurance services and consulting. So I would say more or less a typical Warren Buffett, typical Berkshire Hathaway stock. So then also take a look at the financial numbers of Marsh & McLennan, and when we look at the revenue, we see that the revenue over the last 5 years just grew, and we see more or less also the same picture when we look at the earnings per share from $2.98 to now $3.94 over the last 5 years. This is also very nice. And also the margins are good and stable, a little bit over 10% is a net margin. This is also good and no problem at all. High profitable company. Again, as always, almost always with Warren Buffett. And also when we look at the free cash flows, we see the free cash flows are very stable and also rising lately. So also that very, very positive. And when we look at the debt equity ratio, we see that the debt equity ratio right now is 1.17. So also over one, not a lot over one. So this is not a big deal. As I said before, I like the debt equity ratio better under one, but here with Marsh and McLennan, we also see that the long-term debt decreased a little bit over the last few quarters, and the shareholders' equity just increased. So I think the direction is right, and so this is not a big deal. As I said, it's not what I like, but it's also not a big problem. And so overall, I would say almost a classical Warren Buffett company with high cash flows, rising revenues and earnings, a good balance sheet, a solid balance sheet. So quite good numbers. Then, of course, the question is it also right now a good price to buy into Marsh and McLennan? And when I calculated my intrinsic value, it's around 100 US dollar. By the way, if you don't know how to calculate the intrinsic value, I put here the link up on the screen to a video where I describe how to calculate the intrinsic value. And as I said, when I calculated is around 100 US dollar, and now right now we have a current stock price of $118, and so it seems like Marsh & McLennan is a little bit overvalued, at least in my view. And I have to say, with the intrinsic value, for me, my expected return every time is 12%. And then we come to this intrinsic value and overvaluation, at least on my view. But I think this is a solid investment. It's just not for me right now because it's too expensive, at least for me. I'd like to buy my shares under the intrinsic value and way under the intrinsic value. And so Marsh & McLennan is a very interesting company. I put it on my watch list. Very good, very stable business, but too expensive right now for me. And the third one is Chevron. And Chevron is an interesting one because in the time when Warren Buffett bought Chevron, I just sold my Chevron stocks last week. And I also made a video about that. I also put a link here up on the screen why I sold my Chevron stocks. Feel free to check this out. I sold my Chevron stocks with a gain of around 60%. This was a good, nice trade, but I don't see the long term here with the oil stocks. I still have Imperial Oil in my portfolio, a Canadian oil company, so I'm still in the sector, but overall I don't see the long term. And after the oil price just rose over the last few months, it was time to reduce my positions in oil, and so I decided to sell oil. Warren Buffett decided to buy oil, and of course, when Warren Buffett do something, I guess he have a very good reason for that. And so maybe I was wrong and he was right. Who knows? We will see what happened here in the future. And so overall, when we look at these picks of Warren Buffett in Q4, I have to say it's very interesting, but nothing at this point is interesting for me to buy. As I said, Marsh & McLennan, very, very good company. I put it on my watch list. I have a watch list of around 15 to 20 stocks. Very good companies. I made a lot of videos and analyses. You find all of that also on my channel. Almost all of them are just overvalued right now. And so with the next correction, the next crash, I think it's time to buy into these companies and then maybe also into Marsh & McLennan. We will see. At least very, very interesting. And so that's it for today. If you like this video, please subscribe to my channel and ring the notification bell to never miss another video. And then we will see the next time with another analysis of another stock, or at the weekend again with the update on my real money portfolio. So take care, see you soon, bye bye.